Again, this week we've had lenders increasing and decreasing their mortgage rates. But before we get too excited, we've also got some warnings from the Bank of England. They're saying that there may not be any more base rate cuts this year. So, are we heading for more uncertainty? In this week's update, Leeds and Principality slash rates, Accord Mortgages moves in the opposite direction, and HSBC finally boosts its lending power for first-time buyers. We'll also take a look at Angela Rayner's stamp duty scandal, what rising gilt yield means for the autumn budget, and fresh housing market data from the Bank of England and nationwide. Stick around to the end and I'll share my take on whether buyers should lock in now or keep waiting for better rates. So let's start with the rate changes. This week, Leeds Building Society have reduced limited company buy-to-let rates by up to 0.2%, and also some existing customer rates by as much as 0.41%. That's good news if you're a landlord or you're already with Leeds, though it's worth noting that they've also nudged up some residential rates at 65% loan to value. Principality have cut rates on a wide range of residential products, in particular the lower loan to value rates, but, and this is key, they've increased the rates on some of their buy-to-let products. Accord Mortgages are also in a similar boat. They've pushed up the rates on some of their buy-to-let products as well. So if you haven't already gathered, there is a little bit of a theme here. There is still some competition out there, especially where it's lower risk and on residential rates at lower loan to values, but a lot more caution is creeping in when it comes to buy-to-let. Now, there are quite literally hundreds of thousands of borrowers still in the UK this year that need to remortgage because they've got a fixed rate coming to an end. And I'd love to know, if you're one of them, would you be happy to take a longer term fixed rate now, or would you still prefer to go short in case things improve? Please let me know in the comments because I'd be interested to know. Now, over at HSBC, they finally improved their loan to income multiples for first time buyers. This brings them into line with many other lenders that we've already mentioned in previous videos. And it means that if you're buying a property on your own and you earn over £35,000, or if you're buying jointly and earn over £55,000, then you can potentially borrow more. For a lot of first-time buyers who have been squeezed out because of affordability, this really can make the difference as to whether or not you can get onto the housing ladder or not. Now, as I've said, we have mentioned the improving loan-to-income multiples from many lenders over recent weeks, and this all comes off the back of government guidance. But affordability is still an issue. So I'd like to know, based upon the current economic data that we're seeing and affordability and the cost of living crisis, do you think that lenders should be stretching borrowers further? Or is this just adding to more risk within the system? Please let me know your thoughts in the comments, because the feedback that I'm getting from clients is they're actually quite happy to borrow at lower levels, and they're not really too interested in taking all this extra borrowing because they just feel it makes things unaffordable. So please, like I said, do drop your thoughts in the comments below. Now, we can't ignore the politics that we've seen this week. Angela Rayner, our Housing Secretary and Deputy Prime Minister, avoided paying around £40,000 in additional stamp duty on a purchase that she made earlier this year. Now, this news has been floating around for a little while, but for days she dodged the cameras. But then, when she finally came out and spoke to the public, what did she do? She blamed her advisors. Now, the irony of all this is that she has been seen numerous times in the past criticizing others for similar things, even when they were legal. But for what it's worth, my view is this is not acceptable. I think she only went public because she got caught, and I think now she has to pay the ultimate price and step down. Please let me know. Do you agree with me, or do you think that she should keep her job? Now, looking at the broader economy, and I mentioned this last week, but gilt yields have hit their highest level for over 27 years. That makes government borrowing more expensive. Now, it's not only spooking the markets, but it's also piling a huge amount of pressure on our Chancellor, Rachel Reeves, who this week set the date for the autumn budget on the 26th of November. She has left that as late as she possibly could. Why? God only knows. But ultimately, the thing that's going to come out of this is she's going to raise taxes. Now, of course, she could cut government spending and she could promote growth by incentivizing businesses and different areas of the economy, such as maybe what I'd suggested in last week's video, making some concessions on stamp duty for people that want to downsize. There's lots of things that she could do if she wanted to really stimulate growth in the UK. But no, she won't do that because she has absolutely no idea what to do other than tax, and a little bit more tax. And all of this bad news surrounding the economy feeds right back into the Bank of England. And this week we heard from Andrew Bailey, who warned that there may not be any more rate cuts from the Bank of England this year. Again, something that I mentioned in last week's video. They're worried about inflation, they're worried about the jobs market, and all of this uncertainty means that they do not feel confident in being able to reduce the base rate. And to make matters worse, they actually don't know when they're going to be able to reduce it again. Certainly doesn't look like it's going to be 2025, looks like it's heading into 2026. So in 2 weeks when the Bank of England meet, please don't expect any base rate cuts. Now, on the back of these dire economic warnings from the Bank of England and also the political scandal that we've seen this week, my question to you, should Rachel Reeves be following Angela Rayner out of the door? Or does she need to stick it out and try to improve the economy? Please let me know your thoughts in the comments below. And also, why not add, do you think she could improve the economy? And if you were in her shoes, what would you do? Now, the latest Bank of England data shows that mortgage approvals went up in July by 800 to 65,400. We've certainly felt that in the broker world because we've been really busy, but there is a common theme, and that is, as I mentioned earlier in the video, affordability. It is still biting quite hard. Now, the gap between what one lender will offer you and what another lender will offer you can be tens of thousands of pounds. This is why it's so important to speak to a broker who can give you whole of market mortgage advice. Moving on, we also saw the release of the nationwide house price index this week, and that showed that house price growth slowed from 2.4% in July to 2.1% in August. Why? Well, I think it's because of affordability issues. But not only that, there are reports that there is a huge amount of stock available on the market, and it's not selling for a couple of reasons. One, because of the affordability, but two, because the stock is overpriced. Now, if sellers want to sell their property, they need to be realistic. Too many properties are listed at overinflated prices, and that's all because estate agents are telling the sellers what they want to hear. And that is the promises of, we will be able to get you more money than any other agent. Agents are doing this only to win the business. They're not doing it because it's in the seller's best interest. But here's the thing. Buyers are not stupid. They're out there day in, day out, researching, negotiating, and they know value when they see it. So if your property is priced correctly, it will sell quickly. And because people are having to reduce their prices, I think this is one of the other reasons why we've seen the nationwide house price index report prices dropping in the last month. So what does all of this news mean this week? Well, lenders are still cutting rates, but again, it's much more cautiously than it was previously. The Bank of England are also holding back on rate cuts, and they don't know when the next one's going to happen. Mortgage approvals are creeping up, but affordability is the sticking point. Now, my takeaway on this is if you're looking for a mortgage right now and you find a rate that works for you today, it may well be just worth your while locking it in rather than gambling on any more cuts coming along, because they just might not. Give yourself peace of mind, secure your rate, and then you haven't got to worry about it for the next few years. So that's this week's update. Cautious lender cuts, stretched affordability, political scandals, and slowing house prices. I've put the links to the Bank of England data and the nationwide house price index in the comments below. So if you do want to have a read of it, then please feel free to click on those links. But I'd love to hear your views on this week's video. Are you ready to lock in a rate now, or are you waiting for more drops? And what do you think to Angela Rayner and Rachel Reeves? Should they both step aside now, or should they stick around? If you found this video useful, please do give it a like. Consider subscribing if you don't already, and I'll see you in next week's update. As you can see, there's a lot changing every week, and I'm here to make sense of it for you. Take care.